In this class, we'll discuss about the priority sector lending in India. Priority sector lending is one of the important role given by RBI to the banks for providing a specified proportion of the bank lending to few specific sectors like agriculture and allied activities, micro and small enterprises, poor people for housing, students for education, and other low income groups and weaker sections. That is, it is an instruction given by RBI to bank to provide a certain portion of their total bank lending to some specified activities like or sectors like agriculture and allied activities, micro and small enterprises, poor peoples for housing, students, education loan for students, the income as a loan to low and weaker section. This particular portion that is dedicated for these types of lending activities are known as priority sector lending. And this is essentially meant for an all-round development of the economy as opposed to the focusing only on the financial sector. That is, these are mainly for the all-round development of the economy, that we know that a majority of the people depends upon or comes from these categories, and if these sectors are developed, then only we can achieve the all-round development of the economy. In 1972, the description of the priority sector was formalized on the basis of the report submitted by the Informal Study Group on Statistics relating to advances to the priority sector constituted by the RBI in May 1971. That is, this term was used in 1972 as on the basis of the report submitted to the RBI Initially, there was no specific target set for lending to the priority sector, but in November 1974, the banks were advised to raise the share of these sectors in their aggregate advance to the level of 33.3% by March 1979. That is, or provide 33.3% of their bank lending should be to the priority sector by 1979. Till 1974, there was no target. In 1974, a target of 33.3% must be given as loans to the priority sector. By 1979 was given as a target to the banks. And priority sector lending is a special mechanism introduced towards providing institutional credit to the sectors and segments for whom getting credit otherwise is a very difficult task. In 1974, the private sector banks were also advised by the RBI to reach the level of not less than 1/3 of their total outstanding by March 1980 at par with the public sector banks. In 1980, on the basis of the recommendation of the Working Group on the Modalities of Priority Sector Lending by Banks, chaired by K.S. Krishnaswamy, all commercial banks were advised to achieve the target of priority sector lending of 40% of the bank advance by 1985. That is, up to 1974, there was no target. From 1974, 33.3% was given as a target. By 1980, the target was increased to 40% and it must be achieved by 1985. The sub-targets were also specified for lending to agriculture weaker sections within the category of priority sector. That is, earlier there was priority sector sector only. Later on, it started subcategorizing the priority sector. As far as the priority sector norms are concerned, scheduled commercial banks are supposed to give 40% of their loans to the identified priority sector as per the regulation of RBI. And the stipulation of 40% of the loan is supposed to be measured in terms of adjusted net bank credit. It is on the basis of the adjusted bank credit or the 40% of adjusted bank credit. Priority sector lending norms. Priority sector lending is a tool given by RBI to banks for providing a specified portion of the bank lending to few specific sectors, like as we have mentioned. And the idea behind this is to ensure adequate institutional credit reach to the vulnerable sectors of the economy. The categories under the priority sectors are agriculture, micro, small and medium enterprises, export credit, education, housing, social infrastructure, renewable energy, otherwise. These are the various categories that comes under the priority sector lending. And later on, this priority sector lending norms was revised to include loans to startup, according to the RBI, with a view to align the guidelines with emerging national priorities and bringing sharp focus on inclusive development. The guidelines have been reviewed after wide-ranging consultation with the stakeholders. In addition to giving loans to the startups, the borrowing limits for renewable energy sector, solar power and compressed biogas plants are also being raised. The implementation of priority sector lending is given here, and it is to address the regional disparities in the flow of priority sector credit, while higher weights will be assigned for incremental priority sector credit in the identified districts where credit flow is comparatively lower. A lower weight would be assigned to incremental priority sector credit in identified district where credit flow is comparative. That is, the higher weight will be given to the districts with lower credit flow. All scheduled commercial banks and foreign banks with a sizable presence in India are mandated to set aside 40% of their net adjusted bank credit for the lending to these sectors. In April 2016, RBI came with another innovation in this sector by introducing priority sector lending certificate. This was a pragmatic way to balance the interest of the sectors meant to be the target of priority sector lending, and under this innovative priority sector lending certificate arrangement, the banks can trade the loan certificate given to the different sectors to meet their target. In this, the bank can buy and sell priority sector lending credit, manage their priority sector lending requirement, especially any shortfall in their priority. This is a provision for buying and selling of the priority sector credit. And the foreign banks were also given the orders to keep 20% of the net adjusted bank credit for the priority sector lending. The limits for priority sector lendings are given here. For education 20 lakhs, for renewable energy 30 lakhs, export 40 lakhs. These are the limits for various priority sector lending. What are the constraints in the priority sector lending framework? Priority sector, or what are the problems related with the priority sector lending? Priority sector lending is a desirable activity sanctioned by the RBI. Under the priority sector lending framework, banks keep aside a fixed amount of credit for giving them to priority sector like agriculture, food processing, MSME, which are specified and revised periodically by the Reserve Bank of India. And priority sector lending norms seeks to attain financial inclusion and inclusive growth by ensuring that sectoral growth is not hampered by the dearth of adequate timely credit. The merits of priority sector lendings are given here. Priority sector lending is a desirable activity sanctioned by the RBI for the bank. Under priority sector lending framework, bank can keep aside a fixed amount of credit for giving them to the priority sector like agriculture, food processing industry, MSME, etc. Third one, priority sector lending norm seeks to attain financial inclusion and inclusive growth by ensuring sectoral growth. Banks are sometimes unable to fill up the mandated priority sector credit due to the dearth of banking network in remote areas. Second one, there is a serious dearth of financial literacy and farmers are sometimes afraid of accessing formal credit. Then third one, out of sheer ignorance, farmers in rural areas rely on money lenders who lend money at very high interest rate. There are other procedural complications like the verifiable land records are not present in most of the cases. The modernization of land record is still to get top priority. These are some of the constraints, that is the absence of literacy. The banks themselves find it difficult to fulfill the mandates. Procedural delays are there. There are delays with respect to the land records, etc. These are some of the constraints with respect to the priority sector lending to different sectors are given here. The highest amount goes to the agriculture and allied sectors. Here we explained about the priority sector lending and what are the criterion for priority sector and what are the merits and constraints of the priority sector lending.